Hello everyone, welcome to this week's edition of the Renko Edge, where I look at the Renko charts in the futures world for possible trade ideas for the week ahead. It's the usual format, go into the charts and see what is going on. Also a quick look at the seasonality first, and we're going to head into my spreadsheet, see what we've got coming up around the corner. Quite a bit going on. As you can see, we're coming to the end of October. So let's start from the top, those ICE markets there. That's the ICE exchange. What's worth looking at? Orange juice picks up for November, and so does lumber. Orange juice mainly because of hurricane season there over in Florida. And then what we got going down? Corn looks weak seasonality wise. Soybeans still positive. Rough rice looking positive, but the charts will probably show you a bit different at the moment. In a moment, metals all looking pretty bullish and getting stronger into December and the new year. In the energy sector, it's all turning a bit more bearish. Other than nat gas, that's another sort of weather seasonality play there through November into December. And the stock markets, well, it's positive season all round there, getting stronger and stronger into what we hope may be a Santa rally into December. So let's get into those charts. Going to start in the usual place, the metals. Copper drifting upwards, nothing too exciting going on. We can see that movement there. You've got this double top in place. You can see there and there around, is it 5 spots, 217. The indicators bullish at the moment. So it's called picking up, so could suggest a reversal back down. Let's get the Fibonacci on copper. Copper's a popular market for day traders out there. Some reasonable volatility, a lot of interest obviously from China, and in perhaps probably 60% of the metal probably ends up in and around China. So that's one area to watch in regards supply and demand. But we've got this interesting Fibonacci line at 4.966. I'm just going to try and convert that into LME numbers. Just want to see. So we're looking around the 10,000 area possibly there. But yeah, this double top looking interesting at 5149, and that range, you can see that block of action between there. So watch for a breakout above, and we could be targeting up to 5.59. Downside wise, again use the Fibonacci's 4.74. Seasonality wise, not looking too bad. We said the metals are quite strong this time of year. Commitment of traders, large speculators though, feeling a bit more bearish, so it's feeling actually a bit more neutral at the moment because of that. Volatility also decreasing down to only 26%, so not greatly exciting there, but like a bit more action there. And what we got, short and medium term is looking reasonably strong, but right at this moment of time we are in a slight pullback, so hold your horses if you're bullish and time your way in. So nothing too special there on copper. And in gold, well, we know all about gold. It's been roaring away this year and peaked out at around the 4,400 mark. That lovely little rally over most of this year, pulling back into towards the 3,900 zone. It's broken down through that. So if I was going to do the rules of technical analysis there with that double top, you might get down to 3,900 as a pullback, then maybe that's a buy the dip opportunity. But more interestingly to me, well, actually before we actually get onto my more interesting point, volatility It's stormed on up to near 50% there. Speculators still long, and seasonality still, pretty decent. So it's still a long play for many reasons. But like I said, more interesting to me is silver and platinum, because silver, and platinum both combined have supply issues, more supply issues than gold, and the demand is still there for many other fundamental reasons. So if you're looking for two metals markets that might outperform gold going forward, keep your eye on those two. Obviously quite correlated, and you can see we've got the same sort of effect. Silver peaking out just under 54, pulling back into this noise here. Could be heading towards $44. At the moment, all the indicators are down. Seasonality looks pretty decent. Neutral on the large speculators. Volatility up at the 60s. It was higher earlier last week in the 80% mark. In the short term, it's looking weak. But like I said, keep an eye on that for possible buy the dip opportunities and any supply demand issues there. And over to platinum, it's a pretty similar looking chart, isn't it? And heading into those more sort of sentiment indicators, we got sort of more neutral seasonality there. Commitment of traders looking bullish. Volatility picking up very high to 77-80% area. Chart pattern wise, it's looking pretty similar, stopping at 1570 area on that 61.8% Fibonacci line. Possible further pullbacks down towards 1450, 1460. But like I said, watch out for supply issues that could spark a nice little bounce back, but always time your way in using the technical analysis. So two there to keep an eye on: silver and platinum. Palladium, not so interested in this one. Maybe we've got a heads and shoulders maybe appearing, so you would take that middle part, add it to here. We could be falling back down towards 1300, 1250 sort of area. Looking weak at the moment. Volatility up, seasonality nothing special, and in the short medium terms also pretty flat. So that's the metals. Over into US dollar, the dollar index. If you want to trade that, you find it on the ICE exchange. We've had this nice little run up, as you can see. It's dollar strength peaking out just there, and then pulling back into the noise again. Nothing too much to take on board there, but when you're pairing it up with the other currencies, it's always useful to know about the dollar strength and getting the strongest and weakest together to create the optimal pair. And if we quickly scan through those FX pairs that are available in futures world, we've got a bit of a bounce there in the Australian dollar. Potential numbers to look at, well, it's coming up to that Fibonacci 65715, but like that there 65995 with all that noise in there could be a overhead sort of stopping point before maybe coming back and staying in that sort of range. Downsides, use the 38.2, 23.6 there, 65430 and 65080. Pound not looking very great there, looking weak against the US dollar. Canadian maybe consolidating at those recent lows, trying to push on back up. Let's have a quick Fibonacci look. Let's hit this overhead here at 71695. Maybe look for a move up to 7196. The indicators all looking good, pushing on up. Seasonality, large speculators, not much to call there. Volatility massively low. Look at that, 4%, absolutely nothing there. Think about that when you're looking at like platinum and palladium, where we're looking at 80% nearly, and just 4% down there on FX markets. So you can see the difference. Japanese yen, that's normally a good trending currency pair if you're going to pick one to trade. I like that one particularly. And looking weak, but possibly bottoming out. We've got the Z score down there turning round. We've got the stochastic pushing up. So let's just take the Fibonacci there. Just see if there's anything more obvious going back. Well, it's hitting lows there, the Japanese yen, so weak against the US dollar. Volatility 7 to 8%. Nothing much in there. Short term feeling weak, neutral. Nothing to get excited about. Just turning at that point, so that's one to watch. And it looks like it's got overhead resistance around at 0.0066445. So you might see a bit of that before it can regain strength. We had the Japanese election, new female prime minister, first ever, I think, in there, creating the change in the feel of the yen there. Let's just remove that and put it the other way around. Some downside targets. Down to there would be my next target, 0.00646. So that's the yen. Euro, I've left on actually the Fibonacci from the last week. We had that double bottom, using that Fibonacci ladder to climb on up and pull back, and it's back in the range again, so nothing too exciting there on the euro. Probably feel a bit more bullish. Got that Z score pushing back upwards, suggesting some reversal to the main, which come to the 50 line, but often that follows through up to the top side, so it might have a bit more legs there to the upside. The large speculators bullish. Nothing much seasonality, volatility wise, and in the short medium term you could call it weak bullish maybe at best there. And then we've got Brazilian real, not looking too bad, pushing on up. We're getting towards those highs, 0.18875. The Mexican peso, what that's doing, pretty choppy. Hard one to trade that with the Renko charts. So maybe looking for that move down into that zone. Swiss franc, nothing much to take away there, pretty flat and dull. No other indicators on there flashing at me saying I'm interested. And then South African rand again, also another tricky one, being quite sideways in this range. Look for breaks out above or below there, 0.57 and 0.0579 there. Back into crypto. Now that's been an interesting market for the last few weeks. We've seen the sell-off down through here and then stopped in around 105,000, and then you can see it's been trading up slowly, just getting to 116,000. Next stop 118,670, around that zone, then 122, and then back to the highs. Everything looking pretty decent signal wise. We go down to seasonality, seems to pick up this sort of time of year all the way through to December. Some good fundamental changes there going on under the scenes. More investment through structured products around the world, especially over here in the UK, just going live. And the short term, medium term, also looking reasonably bullish. And Ethereum, not so exciting at the moment. We had the same sort of run up sell off pattern, bottomed in at 3749. Again, seems to be stuck in that range between that and 4250. So you call it 4250 to 3750. So you know, plenty of points to trade in that zone there. And then, like I said, just wait for the reason, the excuse for it to pop up, but time your way in with the indicators. Into energy, crude oil, it's like in the Fibonacci's by the looks of that. That's last week's Fibonacci on there again. Topping out on that 38.2% there at $62.50 before tracing back. Probably got down to about $60 for for any buying the dips there. At the moment, indicators are weak and bearish, short-term mix as well, so it's all got a feel of a bit of neutrality there. Seasonality wise, looks bearish. Large speculators bearish. Volatility, so I'll call it average, nothing exciting. So I think you're probably going to look for range bound swings in a reasonable dollar range of $3, $4, $5 there on crude oil. Heating oil, very similar to crude oil, but looking a bit stronger at the moment than crude oil, pushing up towards those highs. 2.45. Seasonality is going to be the same picture as WTI. Weak, neutral, COP numbers. Volatility picking up a little bit, but short term, weak bullish, I'd say. And then nat gas, we got that seasonality play this time of the year, but looking range bound. So expecting a pop. It can get volatile, as you can see. We've got 82% at the moment down there. It can go a lot higher than that, so it's a dangerous one to trade. That 150% not that long ago. I'd say the commitment of traders looking reasonably bullish, but gone a bit flat quiet the last month or so. So that's suggesting that range bound nature and short medium term as well. Also not looking that excited, so look for weather events, that sort of thing, to spark off interest. RBOB gasoline, nothing much to take from there as well. And into the world's stock markets, lots more positivity here. S&P 500 breaking on up from our last week's range that we put in round there, probably helped by that Chinese and Trump negotiations and trying to sort out the tariffs and stuff between each other. Probably helped drive that on upwards out of that range. Next upsides, it's just under 7,000, which would be amazing if you get there by Christmas. 7,000 by Christmas. What's the betting on that? Short, medium term, both strong. Seasonality, like we talked about, very strong. Large speculators weak though, which is interesting. Volatility, pretty poor for stock market like that. 11-12%. I'd like it more around the 20-30% to be more interesting and easier to trade. Nasdaq, same story. Upside targets, say 25,900, then 26.25, then 26.5 plus. There, all bullish. Indicates all bullish. Seasonality bullish. Maybe more bullish than the large speculators as well. But volatility also low there. Needs some more momentum in that volatility. Over to India with the Nifty, again looking good. Little sell off there at those highs at 26,000. Just came back to the Fibonacci line at 25.75, then pushing back to the highs. Got to get through there to 26,400. All looking pretty decent on the charts though. For more bullishness, the DAX in Germany, not so fun. Back into this noisy range, 24,800, 23,800, so 1,000 points there. Tricky to trade. It looks a bit sideways, but the only hope for it maybe coming in towards the year end, Santa rallies and all that might push it back towards those highs, but one of the weaker, bigger markets at the moment. And then over to Japan, and again, similar, very correlated to the US world, breaking on high and through highs, looking for 51.5 next upside there. Downsides 48,875, all looking positive though, seasonality wise. Large speculators weak, but price action all very positive. Then into some softs, cotton, nothing too much to take away there, back into the range. Coffee, leaving on the last week's Fibonacci's. Let's just pull them back down. Interestingly, did turn there. Looks like a lot of noise around that, and we're taking this price back quite a way now. You can see that range there, 435, 440 down to 280, so it's a big old gap down there, but at the moment it's holding around that 400, that's a round number thing. And then, like I said, a lot of noise in here, so if it gets in there it could get stuck for a bit. So that's down to 350, 360. Gonna have to do something to break through those highs and get up to 475, 480. Then orange juice, like I said, we're coming into hurricane season, so that might stop the rot down there. Let's zoom in a bit. We've got this, like I said, hitting the lows. It is still at the lows, but this time of year you can get big volatility spikes, and they could expect it to get back to 245, 282 upside wise there for potential price action on any hurricane issues. If not, expect it to move back down towards the 180, 175 zone. Volatility has picked up, near 90%. Large speculators short, but yeah, it's feeling still weak at the moment, but be careful of surprise upside spikes. Cocoa again bottomed out at 5,700. Didn't want to go below there. Still, weakish at the moment. Coming into the Christmas season, maybe a bit more bullish seasonality. 6,870 looks a good upside target, and then 7,600 into that noise over there. At the moment, though, still looking pretty weak. And sugar continuing its weakness, it's breaking down. It's not looking too good. Had that really strong treble top up there. 1, 2. It's the beauty of Fibonacci. It does highlight these ranges and reversal points and trends a lot easier. So 1690 was that sort of top 1700 zone there, and it's broken down between all this Fibonacci noise here, which was 15.5. That's using the sort of obvious numbers here, and we're down into the 14.5 zone. Further price cuts to 14, and then down into 13.5. But I look for a bounce back if it does to 15.5 and stay there. Interest line still looks weak though. You've got large speculators weak, seasonality weak, and short and medium term weak. So sugar not looking great there. We'll scout over the other sugar. Live cattle still trolling upwards with those sort of buy the dip opportunities, but not great play at the moment. Feeder cattle similar but slower. Live cattle looking the better of the two. The hogs right down to the Fibonacci line. Down further downsides, it's that marked area down there. 72.6. Would we see a bounce? I'm not so sure. Upsides 88.7, 93.9. Well, COP report certainly showing bullish. Volatility up 75, 76%. Seasonality sort of stepping up. Bullishness, short, medium term, still weak. So it's a mixed bag. It's very volatile, tricky one to play. Dry wheat, sorry, nothing to talk much about there. Milk again, nothing too much there. Lumber, liking the Fibonacci's by the looks of that. Look at that on the 61.8 reversal point, back down to the 38.2. So that's 587.5 and 629. So next downside target 562, and then back to the lows 521. Short, medium term, definitely still bearish. Volatility picking up a bit, mid to late 30s, but the COP still saying it's the bears in play at the moment. And then canola hitting highs into corn. So corn's looking a bit more seasonality wise, it's reasonably strong at this time of year, as you can see down there in the bottom corner in our chart earlier, a spreadsheet. Not looking bad, but not following through with large speculator noise there, and volatility particularly low, below its average. Short term, not too bad. So I want to keep an eye on corn there, but you've got to try and get it through that high zone, 430, 431, and then you would be targeting 437, 440, possibly for upsides there. If not, you can stay in this range and probably bounce between those Fibonacci lines. Soybeans, good seasonality again this time of year. Just take a look in that chart down the bottom there, on right. Very good. Large speculators just picking up. Nothing great there. Momentum in the short, medium terms very positive. See that nice big rally up there to 1,080. Those highs got a double top in play, so we might see a pause in the price action as it maybe bangs between there to try and go higher again. Upsides, what have we got? Further upsides at 100 sort of area. Targeting that if you're still bullish in there. Then the other soy complex, not so great looking for the oil futures. Look for a move either way there into that sort of zone. And then meal following the main soybean contract there. Let's get the right thing on there. Hitting highs, upside targets, hitting breaks, so it's actually pulling just back at the moment. You can see the indicators. It's weak, Z-score turning south, looking weak. Seasonality, it does have some strength. Large speculators picking up. Short, medium term, not looking bad, but maybe a little pullback by the dip opportunity to 292, 290 area to go there. But it did move up quick, and it can also fall down quick. Look for the 61.8, 38.2 as possible support areas. Oats, just maybe reversing from those lows, 280, 290. Rough rice, what's that doing? Still feeling pretty weak. And finally, we've got wheat back into the range. It's looking all a bit boring there for wheat. In between that quadruple top, 530, 533, and the bottom at 493. So that nice range to play in. Watch for breakouts either side. So there you go, as I start choking over my cup of tea. What are the highlights? Well, still got some good strength there in the stock markets. One's to watch: silver, platinum, maybe. Orange juice for volatility spikes down to hurricane season. Sugar still looking weak, so plenty to take your fancy there. We got a question in. Thanks for all the great content you produce. I'm a fan of Renko, but seem to have problems with it on TradingView. Repainting issue, I assume. Are you able to share your layout on TradingView? I've got loads of layouts on TradingView. Join me in the Facebook group that we have. It's free to join. I've put on charts and stuff in there, talk more openly. It's difficult to share it on here because this is about content, about ideas for the week ahead. But I've got loads of strategies. Join us in there if you want to learn more about that. But repainting, you know, I don't like to use the word repainting because I see it as a sort of negative connotation, but it can be used to your advantage massively. But there's ways around sorting out the repainting to make your trades more certain, more it will save you getting knocked out of trades, taking incorrect ones, and you can do things like filtering with trend direction with bigger block sizes. Lots of different ways. You can even use the repainting as a strategy as well. So lots there. Like I said, just joining the website and the groups that I've got. You know, a lot of it's free. A lot of the content's out there for you. You know, email me. You get stuck. Happy to help. So there you go. That is this week's analysis done. Wishing you all the best for the week ahead. Hopefully great success using the Renko charts, and we'll be here again this time next week. So thanks for joining me, and I'll see you again soon.